Alright guys, and here on our news it says researcher, why powerful people are so silent about XRP. So, have you ever noticed how public figures freely hype up speculative tokens while remaining completely silent about XRP? What if the silence isn't disinterest at all, but a deliberate move to finish building the foundation before the rest of the world catches on? So, in this video, we are stepping back from the daily noise to examine a fascinating structural narrative. A prominent an X post shared by analyst Apex Crypto Insights right here argues that the quiet surrounding XRP is actually a strategic stance. So, I want to unpack this theory, dissect the Triffin dilemma, look at the community perspective, and explore what this means for institutional planning. So let's start about why are powerful figures so quiet about XRP. Right? Their silence often speaks louder than their words. In traditional finance, major players rarely publicize an asset while they are in the process of building critical infrastructure around it. If an asset is intended to play an essential role in global liquidity, announcing it early only drives up cost bases and creates regulatory headaches. Analyst Apex Crypto Insights right here pointed out here on X that the lack of public endorsements shouldn't be interpreted as a negative signal. Instead, the analyst suggested that influential institutions and key decision makers are intentionally avoiding public commentary because XRP is involved in long-term financial architecture. Rather than treating XRP like a retail market product to be hype online, these entities are treating it as a functional utility. The theory suggests that those involved want to ensure the underlying rails, legal frameworks, and settlement mechanisms are fully operational before broad public awareness develops. So in short, public radio silence gives institutions the quiet environment they need to construct complex systems without retail frenzy interfering with their execution. So, how does XRP relate to global liquidity challenges? In my opinion, looking at global economics through the lens of structural friction makes complete sense. The international monetary system has been carrying legacy debt, currency friction, and settlement delays for decades. Seeing digital assets as a potential bridge for cross-border liquidity isn't a fantasy. It's a logical technological progression. So in the shared video right here, Apex Crypto Insights link XRP directly to long-standing systemic issues like the global liquidity crisis and the Triffin dilemma. The Triffin dilemma highlights a fundamental conflict of economic interest between short-term domestic and long-term international objectives for countries whose currencies serve as a global reserve currencies. When a single national currency acts as the global reserve, the issuing country must continuously supply the world with its currency to satisfy international trade, which leads to chronic trade deficits and undermines domestic economic stability over time. Now, Apex Crypto Insights argued that central banks and international institutions have spent years searching for neutral liquidity bridges to resolve this exact imbalance. If an asset like XRP were to recognize as a neutral bridge asset, its price velocity would need to be carefully managed. A rapid, premature surge in valuation driven by retail speculation could disrupt the delicate balance required during coordinated multi-year transition. Apex Crypto Insights emphasize that these initiatives have been in development for years at the highest levels of global finance, and the current quiet reflects the sheer scale of the project. Now, what do market participants think about strategic silence? The discussions happening across the crypto community highlight two very realistic sides on the same coin. On one hand, institutions operate on multi-year horizons behind non-disclosure agreements. On the other hand, public figures face massive legal scrutiny if they comment on assets they hold or build on. Both viewpoints offer valuable context for why the room is so quiet. The post by Apex Crypto Insights sparked significant debate among market observers on X. A user named Blue Hawk Legend agreed with the theory, pointing out how strange it is that influential figures regularly discuss speculative coins while ignoring XRP, despite its clear enterprise focus. Blue Hawk Legend suggested that major milestones might only be revealed after global financial shifts occurred, aligning with the idea that institutional groundwork happens out of sight. Conversely, another observer, Hito Rug Pull Survivor, offered a different perspective regarding the silence. This user noted that high-profile figures might avoid discussing XRP to prevent immediate allegations of insider trading or conflicts of interest, pointing to public backlashes when political figures or executives promoted digital assets. Hito Rug Pull Survivor argued that leaders stay quiet simply to protect themselves from legal scrutiny while ecosystem developments are underway. Whether motivated by institutional non-disclosure agreements or legal self-preservation, both angles explain why public commentary remains minimal. Now, how does controlled adoption differ from retail hype? We have to step back and realize that retail markets and enterprise markets operate on completely different rules. Retail markets thrive on noise, social media trends, and short-term price swings. Institutional adoptions operates like a heavy freighter ship. It turns slowly, requires strict compliance, and moves under absolute silence until the port is reached. Think of a massive bridge being built over a wide canyon. You don't invite millions of commuters to drive across while the steel beams are still being welded together in secret. You build the foundation, test the load-bearing capacity, secures regulatory clearance, and only open the toll booths when the structure is completely solid. Now, Apex Crypto Insights suggested that the current phase of the XRP ledger is similar to that quiet construction phase. If institutional adoption is designed to settle real-world assets, cross-border payments, and tokenized liquidity, the deployment must be seamless. High-volume liquidity networks require stability and infrastructure rather than viral headlines. The silence isn't a sign of inactivity. It's the natural environment for institutional development. And finally, here is our overall conclusion. When we analyze the theory presented by Apex Crypto Insights alongside broader market behaviors, the narrative around XRP becomes much clearer. The silence from powerful institutions and public figures doesn't automatically mean a lack of progress. As we've explored in this news, structural solutions to global liquidity issues such as the Triffin dilemma require long-term planning, strict regulatory alignment, and careful execution. Whether leaders are keeping quiet due to non-disclosure agreements during enterprise integration or simply avoiding conflict of interest, the reality remains that enterprise financial rails are built in private before they operate in public. So, staying patient and focusing on underlying utility and institutional developments will always offer a clearer view than waiting for public hype. Right, and this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.